Welcome to the Daily Update Podcast, where I'll go over the action in the market for Thursday, May 15th, and we'll see how things look for Friday, May 16th. Going over a market summary of what happened on Thursday, the S&P 500 delivered a resilient performance despite a shaky start. The index opened lower below its S1 pivot point at 5874, pressured by negative futures. However, dip buying throughout the session drove a recovery, with the S&P closing up 0.41% just above the R1 daily pivot level. Notably, trading volume was below average, signaling cautious participation. The S&P 500 broke above the key 5,900 psychological level, which now serves as potential support if prices begin to drop, but faced resistance at the R2 pivot of 5925. Despite the daily gain, weakness in megacaps, semis, and growth sectors hinted at short-term fatigue. Defensive sectors, including utilities, staples, real estate, and healthcare, outperformed, while tech, communication, and discretionary lagged. The financials held positive, but the Dow, small caps, and mid caps struggled at their respective 200-day moving averages. From a technical perspective, the S&P 500 remains positive across the short, intermediate, and long-term time frames, trading above its 20, 50, and 200-day moving averages. However, a long-term downtrend persists, and several indicators are flashing caution. Short-term indicators such as the Stochk RSI, Williams Percentar, and CCI indicators are at extreme positive levels, reflecting positive momentum, but are at overbought conditions. Intermediate-term signals, including the CMB composite and bullish percent index, also shows an extreme positive reading, with the S&P 500's bullish percent index dipping below its moving average on an up day, a potential warning sign. Long-term, the Zohorchak indicator dropped to 4 from 8, highlighting internal weakness longer term. The VIX remained below 20, a bullish sign for stocks, and the advanced decline line is strong. However, fewer new highs and a leveling 10-day moving average suggest momentum may be slowing. The 10-year yield eased from 4.53% to 4.46%, dipping below the critical 4.5 threshold. This supported equities. Numerous economic reports were released on Thursday, producing some inflation concerns after the PPI fell 0.5% against expectations of a rise of 0.3%, though prior months were revised upward. Core PPI, which excludes food and energy, dropped 0.4%, missing the expected 0.3% gain. Retail sales rose a modest 0.1%, below the anticipated rise of 0.2%. Jobless claims came in at 229,000, slightly above the forecast of 226,000, with continuing claims at 1.881 million. Manufacturing disappointed, with the Empire State Manufacturing Index at minus 9.2 versus an expected plus 1, and the Philadelphia Fed Index at minus 4, though better than the anticipated reading of minus 6. Industrial production was flat, missing the expected 0.3% increase, and capacity utilization remains subdued at 77.7. Market sentiment stayed positive but edged lower, dropping to 69 from 70. A sense of FOMO, or the fear of missing out, continues to drive gains, with investors chasing recent rallies. However, high valuations, with the S&P 500's forward PE above 20, and geopolitical uncertainties such as potential tariffs, trade wars, and President Trump's Middle East trip, introduce risks. Despite these factors, the market's euphoric mood remains intact for now. Looking ahead to Friday, May 16th, the market carries a neutral to positive bias for the S&P and NASDAQ, but a neutral to negative outlook for the Dow. Options expiration could spark volatility, particularly in the afternoon session. Key economic releases include housing starts, building permits, import-export prices, and consumer sentiment, with housing and sentiment data likely to influence market direction. Seasonally, post-election years often see rallies following an early April bottom, which supports the potential for continued upside. Technically, traders should monitor pivot points available on the YouTube community tab for this channel, with 5,900 acting as potential support for the S&P 500. Growth to value and discretionary to staples ratios remain in downtrends, but are holding above their moving averages, suggesting a mixed sector outlook. Looking at the key risks and opportunities, while lower interest rates and defensive sector strength provide a tailwind, risks are mounting. Overbought conditions, fading growth stock momentum, and geopolitical uncertainties could trigger a near-term pullback. Investors should remain vigilant as extreme technical readings and high valuations signal caution. In conclusion, Thursday's market showed resilience, with the S&P 500 climbing 0.41% despite early weakness and below average volume. Defensive sectors led, while growth stocks lagged, and technical indicators are flashing overbought warnings. The market remains positive across all time frames, but short-term fatigue and external risks warrant caution. For Friday, expect potential volatility from options expiration and focus on the housing and sentiment data that will be released. While the seasonal backdrop supports gains, overbought conditions and geopolitical uncertainties could cap the upside. I hope you found this podcast helpful. For more in-depth analysis and commentary, the full-length daily video update is available on YouTube and Rumble right when the market closes each day. To access the videos immediately after they are available, or to access the daily newsletter, please click on the links below.